China's hidden economic crisis. Is it the next 2008? Hello, friends. What if I told you that China has quietly become the richest country in the world? Yes, richer than the United States. But before you celebrate or worry, let me tell you something even more shocking. Despite this massive wealth, China is on the verge of a financial disaster. Imagine waking up one day to find that the wealth you thought you had was nothing but an illusion, a bubble waiting to burst. Experts fear China could soon face an economic meltdown, just like the 2008 financial crisis that shook the entire world. So, how did China become the richest country? And why do economists believe it's about to face one of the biggest financial crashes in history? Stay with me, because this story is more than just numbers. It's a warning for the entire world. According to a report from McKinsey Company, China has officially surpassed the United States as the world's wealthiest country. In the last 2 decades, global wealth has tripled, jumping from $156 trillion to over $500 trillion. But here's the insane part. China's wealth has skyrocketed from just $7 trillion in 2000 to over $120 trillion today. That's 17 times growth in just 2 decades. Meanwhile, the United States, once the undisputed economic superpower, saw its total wealth grow only twice during the same period, now sitting at around $90 trillion. So, how is it possible that the US, and with the world's highest GDP, is now poorer than China? Something doesn't add up. To understand this, we need to differentiate between GDP and total wealth. GDP is like a person's yearly salary. It represents the total value of goods and services a country produces in a year. Wealth, on the other hand, is like the total assets a person owns: property, businesses, land, and everything else of value. The United States still leads in GDP, standing at over $26 trillion in 2024, while China follows at around $18 trillion. However, when it comes to total wealth, the combined value of every asset and property in a country, China is ahead. But here's where things get dangerous. China's wealth is not real in the way you think. Nearly 78% of its wealth is tied up in real estate, meaning it exists only on paper, not in liquid, usable assets. And here's the terrifying reality. More than 60 million apartments in China are sitting empty. That's enough housing for over 200 million people, yet no one can afford to live in them. Why? Because real estate prices have been artificially inflated to extreme levels. Imagine an apartment costing 55 times the average citizen's annual salary, completely unaffordable for normal people. To put this into perspective, in major US cities like New York and San Francisco, the home price to income ratio is around 8 to 10 times. Expensive, but still manageable. In China, it's more than 50 times. This is madness. And then came Evergrande, the real estate giant that started this whole mess. This massive property company, which once seemed invincible, has collapsed under $300 billion in debt. The company owns over 6 million unfinished apartments, but it has no money left to complete them. Evergrande isn't just another failing company, it's China's Lehman Brothers. If it collapses completely, it could trigger a financial crisis not just in China, but across the entire world. The company's stock price has already plummeted by over 80%, and its credit rating has been slashed to junk status. Investors are panicking, banks are freezing loans, and the Chinese government is scrambling to contain the damage. Sound familiar? It's eerily similar to what happened in the United States before the 2008 financial crash. Back in 2008, the US housing market crashed because banks gave out risky loans, inflating property prices beyond their actual value. When the bubble burst, banks collapsed, unemployment soared, and the global economy fell into recession. China is now walking on the same dangerous path. The real estate sector alone contributes nearly 30% of China's GDP an unsustainable number. If the housing bubble bursts, millions of people will lose their jobs, and banks will struggle to survive. The Chinese government is trying to fix the problem by introducing new rules, known as the Three Red Lines policy, to limit debt in the real estate sector. But is it too late? If China's economy collapses, the effects will be global. The United States and many other countries depend on China for manufacturing and trade. If China faces a severe recession, the global stock market could crash, supply chains could be disrupted, and economies around the world could slow down significantly. The Chinese government is now trying to control the damage, but its tight grip on the economy prevents transparency. In a country where free speech is restricted, financial fraud and hidden debts could be much worse than we even realize. So, what happens next? Will China find a way to stabilize its economy? Or is it headed for a financial disaster that could shake the world? The reality is that no economy can grow endlessly without consequences. If China doesn't fix its real estate crisis soon, it could face a catastrophic collapse, one that might be even bigger than 2008. What do you think? Will China manage to escape this crisis? Or is the world about to witness another financial meltdown? Let me know in the comments below. If you found this video informative, don't forget to like, share, and subscribe. See you in the next video. Thank you for watching.